In today's video, we got Marco back. Y'all's wanted a part two, and a part three, and a part four, and a part five. In the last TA video, we covered the really basics. So just really understanding trends, understanding trend is your friend until there's a reversal. Definitely check out part one of this series if that's of interest to you. You got to understand the basics before you start layering on more tools. Then we talked about support resistance. In today's video, Marco is going to walk us through some other tools you can layer on, including like the Fibonacci and some other tools, and really starting to talk about entries and exits and just taking profit. How do you maximize the opportunity in front of you? If you have not watched part one, please go back and watch it. If you have watched part one, then welcome to part two. Marco, take it away.
Thank you, Lucas. And so in the first video that we did identify the trend and mapped out some key support and resistance levels. How I map these out is I use the rectangle and just like look at these shark fins. This is how I look, what I'll call them shark fins. And you can just map out and see how price reacts to these levels and see
Mm-hmm.
like whether you can. I like to use them like not really wide, but not really big. So
Mm-hmm.
because these areas tend to do like sharp reversals,
Mm-hmm.
and these are high volume areas where people either have stop losses or take profits or um, shorts, longs getting liquidated and
Mm-hmm.
stuff like that. So here we have a range for Solana. If we take the median for this range around this middle, so if I want to draw the median, we can, we can use the Fibonacci retracement tool and I'll map off this range. So here I'll use the candlestick chart. Why do I use the candlestick chart? So when using the line chart, we mentioned before that when using the line chart, we only have the closing price. The closing price does not mean that the asset went there. The wick does. So we can see that Solana using the line chart goes to 116, but with the wick, we see that it goes to 110. So you really,
Mm.
really want to use the 110. So
And can
the
you
setting
explain to people why we're putting the Fibonacci over the chart?
exactly. So let me just go over to settings on the Fibonacci so everyone can copy them and look at them. So for me, what I want to use when yield farming is I want to close all of these. You can take a screenshot and copy these
Mhm.
settings. The colors do not matter, the numbers do. So I use the 0, the 0.5, and the 1.
Nice.
So usually people have a rainbow and use most of the Fibonacci retracement, numbers from the sequence. I use the 0.5, the 0, and the 1. The 1 identifies a swing high. A swing high is where price tends to go and starts trailing down, and a swing low is the lowest price of this range. So how I draw the Fibonacci retracement tool is I take that swing high, which is
Mhm.
on 18th of March around 209 for Solana, and the range low, which is 109. So how I draw this, and then we have this, we can see that we have a representation of the 0.5. The 0.5 is just the 50% of this range. So whenever Solana moves from here to here, it's about 50%. So 24%, which estimates around of 48%. So why do I have this zero point 0.5 Fibonacci sequence? The zero point 0.5 Fibonacci sequence, a lot of traders and institutional traders use it to take profits. How do they take profits? If they are in short positions or if they are selling Solana, they are selling Solana above the premium. What is above the premium? Anything above the 50% level. When do they buy? Below the 50% level. So when you have a range like this, you want to identify where the 50% level is. We can see that also this 50% level is a sort of a area of interest where Solana reacted multiple times. It rejected here, here. We can see it rejected here. It
Brilliant.
also held as support here. We also have multiple rejections here, but it still stays above. So this is sort of an accumulate. You could call it like buy zone,
Mm-hmm.
accumulation zone. But on top of that, we also have this support where you can also buy in. So you're buying in as long as Solana is below this 50 and above the support. If it starts to break down, because we did mention in the previous video these support and resistance levels are not impenetrable barriers. They can break down easily, either to the upside or the downside. So how I use this, I enter Solana ranges. So for example, I did enter this pool around, I think it was around 140, around here. Once we hit this support level, which I identified from here, so it was around here, we did spike down, sorry, a little bit. And then once I saw this, I used this. So let me just draw it from here. So once I saw it, I draw Fibonacci retracement tool, and I set up a range from this to the bottom, 10% and about 27% to the upside. It's a wide range. You could yield about 0.15%, which is nice. But at the same time, you try to maximize profits by laddering out of Solana and getting the best price. Sometimes this doesn't work. Sometimes support breaks or you get shaken out by this volatility. There's a lot of volatility in crypto. So if you're not used to it, sometimes like you need to assess your risk. Like if you're overexposed, you might get fear and get kicked out of the out of the pool pretty quickly. So what you want to do, assess your risk and enter on support and sell off above the 0.5. So once I saw Solana break above, I start taking profits. So sometimes I set the range. So for example, I see support. I just add a little bit of, so let me just zoom in quickly here. I add a little bit of room. So once I enter, I add a little bit of room to the downside because right now the trend here, we can see that it's bearish. And once we turn bullish, I enter and I add a little bit of wiggle room.
Little snuggle.
So I don't get a little bit of snuggle. Yeah, exactly. And just like start moving my range to the upside. And once I hit that 0.5, I start taking profits, withdrawing from the position because I expect Solana to get rejected at the level. Sometimes it doesn't. So here, like if you were here in this and you see that Solana doesn't reject this level, it starts breaking out, you can enter this level once it retested. We can see here, just retested. You can enter this level as your next support. So you can enter here, a little bit of snuggle, and then to the upside. You can take the previous high. Once that breaks, you do the same. You enter with a snuggle, and then like to the upside.
And guys, if you're watching this, it's like this is not day trading. Just so you're aware, when you're looking at this chart, you can see the long time frames we're looking at here. But this is part of portfolio management.
Exactly. So this is like from a time span of 220 days.
Yeah. This is not like if you're looking at this and you're like, oh, I need to like click buttons and enter new support resistance and take profits from my pools. No. You can do this on a weekly, depending on your ranges and how your portfolio is set up. You can have 1 or 2 days a week where you manage your portfolio. And I also want to let you all know that, by the way, if you want to keep going deeper on TA into like a part 3 and a part 4, we can go as ninja as you want on this. If you missed part 1, please go watch part 1 because all of this is irrelevant to you if you haven't watched part 1. But this can help you not only set ranges, but actually start liquidating or exiting different yield farm or different liquidity pools you're in, like Marco's talking about. So you can actually lock in the profits. Then you can re-enter them. But this isn't a daily thing. This can be over a quarter. This can be over a couple month period, sometimes like over a long period. And if the markets are a little hotter, then yeah, maybe you'll manage your portfolio on a weekly basis. But we're not talking daily here. So you can cash flow and you can treat your portfolio as you can lock in profits. You don't just have to stay in the same position in the same range. So I would love to bring this series to YouTube. I really hope people are watching and taking notes. In the comments, any questions you have around TA, let us know in the comments below because we can create content around it. Marco does 2 awesome articles in the UIG every single day. If you're in the UIG and you're enjoying Marco's articles, also let us know in the comments on the market outlooks and then different ladder out strategies for different assets. We are in a bull market and you got to lock in profits. So use TA to help you. Don't use this as gospel, but use it to help you make decisions. And the more tools you have in your tool belt for TA, the more you can layer on the charts while keeping it simple and make educated, ultimately guesses or bets. But you can have the edge and you can stay on top of the market trends instead of constantly chasing and wondering what the hell is going on in the market. So Marco, thank you for bringing this. I really hope people want more. If you do, again, let us know in the comments below. Marco, final words of wisdom when it comes to TA for our beautiful people who are studying this.
Yeah. So, word of wisdom, when it comes to TA, the market does like to follow the trend. But as we mentioned before in the first video, the trend is your friend
Mm.
until the end when it bends. Words of wisdom when it comes to TA, risk assessment is key to being successful and profitable in the DeFi space. And also, the trend is your friend until it bends. So take profits and be cautious. And yeah.
Marco, thank you so much. If you like this video, like, subscribe, and our only cost of admission is if these videos or this channel is helping you, share it with a friend or someone who you know is gambling and you're like, dude, stop gambling, start investing, use some tools. And I really hope that y'all's lean into this TA chat. We can bring a lot of content to you. So let us know again if you want more. And with that said, we'll see you in the next video.